Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Critical Metals Corp.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. Where to even begin with this one? We are looking at a development stage company.
Right, and that's the first thing to get your head around. Development stage means they're spending money, not really earning it yet.
Exactly. Heavy investment, net losses on the books. That's the profile right now.
But I did see something that might confuse people. The numbers show this early revenue ramp, something like $500,000 for 2025, up like 376% year over year.
Yeah, and that's a really important distinction to make. The revenue it's tiny in the grand scheme of things.
Okay.
It's not coming from the main event, the Tanbreeze mine. It's likely from, other activities, maybe related to that stockpile of high-purity copper powder they bought.
So it shows they can do some business, but it's not the core story.
Not at all. You have to look at this as a pre-revenue play on one massive asset.
And that asset is the Tanbreeze project in Greenland. The scale of this thing is, well, it's kind of staggering when you read about it.
Staggering is absolutely the right word. It's not just another mine. It's described as one of the largest rare earth deposits globally.
And here's the kicker, one of the largest outside China.
That's it. I mean, that's the entire thesis in a nutshell.
Yeah.
When we talk about EVs, wind turbines, defense tech, you're talking about rare earths. And right now, China has a stranglehold on that supply.
So a huge deposit in Greenland, which is, firmly aligned with the West, is a massive strategic chip to have on the board.
It's a game changer. But it also raises that classic question we always see with these big finds.
Execution risk.
Exactly. These massive projects often just fall apart. So what are they doing to make sure this one doesn't?
And it seems like they're not putting all their eggs in one basket.
That's right. They've got this multi-material strategy. First, they're pushing into antimony.
Which is used in, batteries and flame retardants?
Yep. And it's a market projected to hit almost $2 billion by 2031. Then there's that $20 million acquisition of ultra-high purity copper powder.
So they're building this portfolio of critical materials that all point to the same customers. Defense, aerospace, high tech.
All sectors where the security of your supply chain is, frankly, more important than the cost.
It's a smart way to weave themselves into that whole Western strategic supply chain narrative.
It is. They're making themselves indispensable.
Okay, let's talk timeline, because that's always the tricky part. The big payoff is tied to when they start production, targeted for around 2026.
Right. And for a project in a place like Greenland, the risks should be huge. Weather, permits, you name it.
So what makes this so-called de-risked, as everyone seems to be saying?
It really boils down to two things: their balance sheet and the political backing that's turned into actual capital.
Let's start with the financials then.
For a company that isn't really making money yet, their balance sheet is, well, it's remarkably solid. You've got about $172 million in assets versus only $80 million in liabilities.
So that gives them, almost $92 million in shareholder equity? A good cushion.
A very good cushion. It gives them a runway and, strengthens their position when they're looking for more financing.
But a project this size needs way more than that. It needs hundreds of millions. And this is where the story gets really interesting.
It really does. Because the biggest de-risking event was securing $120 million in funding from the U.S. EXIM,
the Export-Import Bank of the United States. And we have to stop and explain what non-dilutive funding means for you, the listener.
Yes. This term is absolute gold in the mining world.
So what does it actually mean for someone holding the stock?
It means they get that $120 million to build their mine without issuing a flood of new shares. Usually, a company would have to dilute its stock to raise that kind of cash.
Meaning they create more shares and your piece of the pie gets smaller.
Exactly. This loan protects the value of your shares. They're funding growth with debt, not by watering down your ownership.
That is just a massive vote of confidence from a U.S. government agency. It's like a geopolitical insurance policy on the project.
It is. And they didn't stop there. They've also been locking in future revenue.
With offtake agreements, right. So they've pre-sold the material before it's even out of the ground.
Yes. They have contracts in place for approximately 75% of the planned output from Tanbreeze.
75%. So 3/4 of their revenue is basically guaranteed for years to come before the first shovel really hits the dirt on the main project.
And they're aiming to get that final 25% locked up by early 2026. If they do that, the entire demand side is, for all intents and purposes, de-risked.
This all feeds back into that geopolitical moat. I mean, the U.S. has made it clear that critical minerals independence is a national security priority. This project is a perfect fit.
It's the core of the whole thing. The market is pricing this stock as a national security asset, not just a mine. It's getting a premium because the West needs this project to work.
And they're not just digging it up and shipping it out, they're controlling the processing too, with that joint venture for a refinery in Romania. Why is that so important?
Because the raw ore isn't where the big money is. The high margins come from processing and separating it into the purified materials that companies actually use.
So by co-owning a refinery in a NATO country closer to European customers.
They capture those higher margins, they secure their logistics, and they cut out any middlemen. It's a fully integrated, secure value chain from mine to market.
All of this de-risking has had a pretty wild effect on the stock chart. Let's shift to the technicals, because this has been an explosive ride.
Explosive is really the only word for it. The stock is up over 250% in just the last 6 months. We've seen these insane intraday swings, like 26% rallies, even 70 or 80% moves in a single day.
That's pure momentum. And just for context, the 52-week range is huge. It goes from a low of about $1.23 to a high of over $32. So even at its current price, there's a lot of potential room to run if the story keeps getting better.
And it's not just retail hype driving this. Look at who owns it. Hedge funds and institutional investors hold something like 86.4% of the float.
86%? Wow. That's smart money saying they believe in the long-term strategic value here. They're buying it up and holding on.
And you see that conviction in the options market, too. Unusually high activity, something like 34,000 call contracts traded recently, which is 4 times the normal volume. The put-call ratio is down around 0.19.
So just to break that down, a ratio that low means far, far more people are betting the stock will go up than down. It's screamingly bullish.
It is.
Yeah.
And technically, that $10 to $11 range has become a really strong support level, a line in the sand where the big players will likely step in and buy.
We have to touch on the catalyst for some of those huge single-day spikes, though. It wasn't an operational update, was it? It was pure geopolitical speculation.
Exactly. The biggest rallies were tied directly to unconfirmed rumors that former President Trump, or maybe the U.S. government in general, was looking to buy or invest in Greenland itself.
Which is just the ultimate speculative catalyst. The rumor alone is enough to send the stock flying because this project, Tambreez, would be at the absolute center of any deal like that.
It would basically turn a public company into a state-sponsored strategic asset overnight.
So you've got this incredible mix of a de-risked asset and a huge geopolitical tailwind. But we need a reality check. This is still a mine being built in the Arctic. What's the bear case?
The bear case is simple: execution and time. At the end of the day, Critical Metals Corp is still pre-production. It's burning cash, not making it. You are investing in a promise, a very well-backed promise, but still a promise.
And the risk of building anything in the Arctic is very real. Construction delays, costs running higher than expected. It's a harsh environment.
Absolutely. And then there's always the risk of permitting hurdles. On top of that, from a trading perspective, you have to worry about valuation. The stock is incredibly volatile, with a beta of 1.36.
Meaning it swings about 36% more than the overall market, so it's not for the faint of heart.
No. And the price-to-book ratio is high, around 10.4. Normally, that would be a red flag. But the argument here is that you're paying that strategic premium we talked about.
You're not buying the current book value, you're buying a scarce, geopolitically critical asset.
Exactly. The high price is the price of admission for that security.
Okay, so looking ahead, what are the near-term catalysts we should all be watching for over the next few months?
First, any updates on construction in Greenland, specifically the pilot plant in Qeqortoq. They're targeting May 2026 for that section to be ready. Any news that confirms they're on track will be a big positive.
Second would be news on that last 25% of the offtake agreements.
Yes, getting those signed, which they expect in early 2026, would completely de-risk the demand side of the equation.
And third,
details on the Romanian refinery. Financing, technical specs, timelines. That's the key to their high-margin future, so any progress there is crucial.
and of course the big one is just watching the political winds. Any new U.S. or EU policies to support critical mineral supply chains would just add more fuel to this fire.
For sure. The thesis here is really a multi-year hold from 2026 to 2030 to capture that ramp up from construction to becoming a cash flow machine.
So, to sum it all up for you, Critical Metals Corp is essentially a geopolitical insurance policy that happens to trade like a mining stock. It's built on a foundation that's been impressively de-risked through some very smart financing and sales agreements.
What's really fascinating here is just how the global race for resource independence is turning rocks in the ground into critical national security assets. That's what's driving this incredible investor excitement, even with all the execution risks that still lie ahead.
And here's a final thought for you to explore. If the U.S. government views this project as indispensable to national security, what kind of price guarantee or sovereign protection might be applied to this asset that the typical market valuation models simply cannot capture? That's what's being priced in right now. Make sure you subscribe, like, and comment to stay informed on the most exciting stories in wealth creation every single day.